The management of Cyient joining in to talk about their quarterly numbers this time round. Ajay Aggarwal, the Senior VP and CFO, is with us. Hi, Mr. Aggarwal. Thanks very much for joining in. It seems as though your margins as well as your profits were largely in line with what the street was working with. But maybe there's a tad miss on the dollar revenue, which is at around 3.6% for this quarter, as opposed to, say, expectations of around 4-odd%. What led to a 3.6% dollar revenue growth? Were there any sort of problems that you faced from clients, and what was your vertical breakup as well, if you can share that with us?
Thank you for having me in. Actually, our growth quarter on quarter in constant currency was 4.2%. So when you talk of 3.6% dollar growth, some of it got lost in the currencies. As such, if you see, there was a good growth from the acquisitions. There was a good growth which came from aerospace, it came from rail vertical, communications, consumer. So most of the verticals we had the growth. We had some challenges in GIS, where one of our large customers did not have so much growth. There was a reduction in volume. We had some small challenges in utilities, where some of the projects had closed down, but we are getting the pipeline in utilities, and we had some little degrowth in semiconductor. But overall, if you ask me, I think it was on anticipated lines and a good 4.2% constant currency growth quarter on quarter.
Okay, Mr. Aggarwal, good morning. In the con call you had said that Ranksons will contribute towards the lower end of the guidance of 60 to 65 million, but in H1 it was only $16 million. So how will you achieve it?
Yeah, good morning. If you see, as far as Ranksons is concerned, we are having two things there. One is in terms of the business integration. We had acquired this company in February 2015. So we have taken a lot of initiatives to integrate it. We have got a very robust management in place now. We have got a good order pipeline. We had significant wins that happened in H1, based on which we expect H2 to be exponentially higher.
Okay, and one more question which the market wants to know. The stock is down 10% today. Is Carlyle looking to exit your company?
Okay, I think it is not fair for me to comment about both these aspects. I think we perform, and it is for the markets to decide which way the stock price should go. As far as Carlyle is concerned, I think we really cannot comment about any existing investors having a portfolio churn. What I can say is overall, we keep meeting a lot of investors, private equity players, FIIs. I think there is a all-time high interest in all the investors in this company. So even if there is some churn, I think there are a lot of people who are interested in the company. Specifically on one particular investor, it will not be appropriate for me to comment. Probably have to go back to them and ask them.
What constituted the margin improvement that we saw?
So we did get a very small part of it. We had an improvement of 240 basis points, 2.4% improvement in margin quarter on quarter. About 70 basis was because of the exchange rate, the rupee depreciation helped us. And the balance 140 bips all came from the operational improvements. Utilization has been all-time high in the recent past. We got a good mix. There is a lot of focus on getting higher margin jobs. So all those operational improvements have been showing up.
Okay, your attrition is inching up, and that's also a cause of concern for the market.
Right. I think in some ways it has peaked. We have been doing some kind of a recalibration also in terms of right sizing, improving utilization, some pyramid initiatives. So I would say now it has peaked. You will see a downtrend, and we should be back over the quarters to our normal attrition rates of 18 to 20%.
Okay. All right. Fair enough. Sir, we leave it on that note. Thanks very much for joining in and talking to us. Well, we have another important corporate lined up, and we have Lata to take